Student loans are a common way to finance higher education, but they can also be a burden for many borrowers. If you have student loans, you may have wondered if there is a way to reduce your monthly payments, save on interest, or pay off your debt faster. One possible option is refinancing your student loans. Refinancing your student loans means that you take out a new loan with a different lender and use it to pay off your existing loans. The goal is to get a lower interest rate, which can save you money over time and help you pay off your debt faster. Sounds great, right? Well, not so fast. Refinancing your student loans can also have some drawbacks, especially if you have federal student loans. So, before you decide to refinance, you need to weigh the pros and cons carefully and see if it makes sense for your situation and goals. Let's start with the pros of refinancing your student loans. 1. The most obvious benefit is that you can get a lower interest rate, which can save you a lot of money over the life of your loans. For example, let's say you have $50,000 in student loans with an average interest rate of 7%. If you refinance to a 10-year loan with a 4% interest rate, you can save about $10,000 in interest and pay off your debt about a year earlier. That's a huge difference. 2. Another benefit of refinancing your student loans is that you can pay off your debt faster by choosing a shorter repayment term. For example, if you have a 20-year loan and you refinance to a 10-year loan, you can cut your repayment time in half. Of course, this also means that your monthly payments will be higher, so you need to make sure you can afford them. But if you can, you will be debt-free sooner and save even more interest. 3. You can combine multiple loans into one, which can simplify your payments and reduce the risk of missing a due date. If you have several loans from different lenders, you may have to keep track of different payment dates, amounts, and methods. This can be confusing and stressful, and if you forget to pay one of them, you may incur late fees and damage your credit score. By refinancing, you can consolidate all your loans into one monthly payment, which can make your life easier and help you avoid mistakes. However, it also has some drawbacks, especially if you have federal student loans. Federal student loans come with some benefits and protections that you will lose if you refinance with a private lender. Let's explore them. 1. You are no longer eligible for income-driven repayment plans, which can adjust your monthly payments based on your income and family size. If you have a low or unstable income, or if you expect your income to change in the future, income-driven repayment plans can help you afford your payments and avoid defaulting on your loans. Some of these plans also offer loan forgiveness after 20 or 25 years of payments, which can wipe out some or all of your remaining debt. If you refinance, you will lose access to these plans and have to stick to a fixed payment schedule, regardless of your income. 2. You won't qualify for loan forgiveness programs, such as public service loan forgiveness or teacher loan forgiveness, which can cancel some or all of your debt after meeting certain requirements. If you work in a public service or teaching profession, or if you plan to do so in the future, these programs can be a great way to reduce your debt burden and reward your service. However, if you refinance, you will no longer be eligible for these programs and have to repay your loans in full. 3. You are no longer eligible for federal deferment or forbearance, which can allow you to temporarily pause or reduce your payments in case of financial hardship, unemployment, or other circumstances. If you face an unexpected emergency or a change in your situation, federal deferment or forbearance can give you some breathing room and prevent you from defaulting on your loans. However, if you refinance, you will lose this option and have to rely on your lender's policies, which may be less generous or flexible. If you decide to refinance your student loans, you should shop around for the best rates and terms from different lenders. You can use online tools such as Bankrate.com or NerdWallet.com to compare your options and see how much you can save by refinancing. You should also read the fine print and understand the fees, penalties, and conditions of your new loan before signing any contracts. Refinancing your student loans can be a smart move, but only if it makes sense for you. Thank you for watching. Let me know what you think about it, and please leave a comment below.